and welcome back to Finance Speaks. I'm Kyle Sadler, president of Precept Wealth Management and best-selling author of I'm Retired, Now What? And the newly released book, The Retirement Shift. As you can see, like most of America, I'm coming to you from home. So bear with me as we go through this week's 2020 first quarter market update. To start off with, let me give you a little background of what we saw this first quarter of 2020. These are technical terms, so here we go. Oh, wow. So in all reality, there really isn't much to speak about because what occurred over the past 2.5 months prior to the market drop is pretty irrelevant at this point. Because prior to all of this, we had a stable economy with a continuous bullish market, but then the health of the world unfolded. From toilet paper shortage to extreme market volatility, we have learned one thing for sure over the past 2 months. Life is not about rainbows or butterflies. I don't know about you, but I get sick to my stomach just thinking about the teacups at Disney World. And these market swings can give someone the same feeling. However, at least riding the teacups, it's a shorter ride. 2020 will be the year that we will all speak of for a long time, a time we can share about the scare of the COVID-19 virus and the market drop and recovery. Oops, did I say that word too soon? Okay, well, let's dive in immediately and discuss that word up front, recovery. Okay, this quarterly market commentary is going to be a little bit different than usual, but before I go into the recovery, let me retrace. I'm going to use that word in just a little bit in a different context. So let me retrace where we came from. The market stunk over the past couple of months. It acted erratically, and its behavior that we have seen this before. However, the behavior was caused by a different topic, but all other times it has always been a different reason. Dot-com bubble, banking bubble, 9/11, OPEC, Cuban Missile Crisis, Persian Gulf War, 1 and 2, COVID-19. You get the point. There has to be a cause for there to be an effect. Here it is charted out. You see, the markets are resilient, and COVID-19 will just become another dot on a line graph. The cause significant now because it's affecting us now, but later the effect will dissipate. So, are we out of the woods? Unfortunately, there is not a defined line that distinguishes volatile versus further downturn versus, here's that word again, recovery. However, we look past the behavior pattern to determine if 1, the market has reached the bottom, and 2, if there is additional or continual weakness in the markets. If we just look at history, doesn't matter what the cause is, but the effect, we can see that we are in a bear market. How long? We can't just exactly know until we're out of it. But looking back at history, I would say probably another 18 or 24 months. But Kyle, this time it's different. You know, I've heard this phrase for the past 21 years of my career. And before my career, every financial professional has heard that phrase. And no, it's not different. The only difference is the speaker's focus. So we need to change our focus because the key is to know that don't mistake the market for your portfolio. What is being reported on TV and what you have in your well-diversified portfolio are 2 separate types of investments. Let past experience be and historical data be your comfort so that we don't allow short-term results to disrupt our long-term plans. You see, this data is not miscuing figures to make investing look better. In fact, this is the last 50 years of data. Think of everything that has happened over the past 50 years. Could this time be different? I bet my opinion that it won't be. 10 years and no negative. If you need more reassurance, call me and we can speak more in depth. But now let's transition and speak briefly on short term. That word I used a few minutes ago, retrace. Here's what I think. In the next few weeks, maybe mid-May, maybe end of May, maybe June, we should see the markets retrace and retest the lows from back in March. And now, this is normal market behavior. Oh, and what will I be doing personally? Well, I'm going to be taking my cash and buying because remember, buy low, sell high. You see, historical data tells us this. But what if it doesn't retrace the lows? Here is what I can tell you. And I'm repeating myself from my weekly update that I emailed out to you. No matter if we are seeing the market rising, we will not be complacent. There is some trust missing in our relationship with the market behavior. So right now, we are cautiously proceeding. The best thing I can say, and I know that every compliance officer will squirm with this statement because we're not allowed to make guarantees in the industry regarding the markets. So I will have to start my sentence by saying, it is in my opinion, the markets will return. The markets will go on and set new highs, and people will prosper, and rainbows will eventually appear, and so will the butterflies. And then possibly we see it happen over again, but this time a different cause. Because as long as the United States exists, as long as the world exists, people will exist, and people will demand and consume products, and companies will make profits, because this is how finance speaks. I'm Kyle Sadler, headed out until next time. Be blessed and know that darkness cannot exist among light, but light can exist amongst darkness. So be the light to those in need. Thank you.